Greetings, everybody. Welcome to Liberty Call. Today is Monday, November 25th, 2024. Hope you're having a fantastical day out there in the interwebs. It's a beautiful day here in Colorado. We had a little snow this morning, just a smidge, just enough to coat the cars, but the roads were fine. I had to go out and head to Civilization to pick up my mail and pick up the ham for Thanksgiving and a bunch of stuff like that. So I apologize for being a little bit late this afternoon, but is what it is. Traffic was a mess. My beard's all frizzy. So anyways, all right. Like I said, hope you're having a great day out there. Hope you had a good weekend. My football teams did not do well, although the Noles did win their second game of the year, which was nice. But the Cougars played like garbage on Saturday. Well, the basketball team, I think, won on Friday night. Football team lost on Saturday. The Texans lost to the Titans yesterday, which I couldn't see the game, and I tried to pirate it, but couldn't find a way to get it to tune in. But anyways, all right. Well, before we hop into the markets and the weekly update and all the good news for the week, I need you to do me a favor. Yes, please help me out. Give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right. Well, it is Thanksgiving week, so things are probably a little slow in the news, but let's go ahead and get into markets. Dow Jones was up 0.99% today, 440 points, closed at 44,736. The S&P 500 up 0.3%, 18 points, closed at 59,87. NASDAQ up 0.27%, 51 points, closed at 19,054. The VIX was down 4.2% today. It's at 1460. Canada down 0.13, Brazil down 0.07, and Mexico down 0.4. Let's go to Europe. Germany was up 0.43, the UK up 0.36, France up 0.03, the Netherlands down 0.05, Spain up 0.47, Italy down 0.2, Switzerland down 0.18, and Portugal up 0.47. Russian exchanges both red again today. MOEX down 2.06, RTSI down 3.2%. And the Asian markets, the Nikkei was up 1.08%, Australia up 0.28%, New Zealand flat at 0. Let's see, the Shanghai in China was down a tenth, the Shenzhen Component down 0.17, China A50 down 0.47, DJ Shanghai down 0.28, Hang Seng down 0.41, and the Taiwan weighted was up 0.19. All right, so those are the markets for today. Feel smarter? I know I do. I don't want that big. All right, let's hop into the weekly economic update. Stocks advanced last week, powering ahead with pre-holiday optimism despite geopolitical tensions and two disappointing Q3 corporate updates. The S&P 500 rose 1.68, NASDAQ gained 1.73, the Dow Jones picked up 1.96%, and overseas markets were flat, down 0.05. Stock push ahead. Stocks showed mixed results during the first half of the week due to geopolitical tensions that boosted precious metals and put pressure on Treasury yields. The Dow Industrials jumped out in front midweek and never looked back. Disappointing earnings on Tuesday from a large box retailer held back some gains in the broader S&P 500. A mixed Q3 update report from the nation's leading AI chip-making company also tempered gains a bit. Year-end optimism, especially around consumers driving a healthy holiday shopping season, supported the rally for much of the week. Fresh data that weekly jobless claims dropped to a 7-month low also lifted spirits. All right, small cap focus. For several weeks, investors have favored small cap names over larger cap issues. The trend was again on display last week. The Russell 2000, an index of 2,000 small cap companies widely used as a benchmark for U.S. small cap stocks, rose 4.5% for the 5 days of trading. In the month to date through November 22nd, the Russell is up nearly 9%. Wow, pretty good. Key economic data this week. Tuesday, we have consumer confidence, new home sales, and the FOMC minutes. Wednesday is GDP, durable goods, pending home sales, and personal income and outlays. Thursday, the market's closed. It's Thanksgiving. Woo! And nothing on Friday. I assume the jobs numbers will come out sometime, probably, I imagine, by Friday. And just a few companies reporting earnings this week. Monday today, Agilent Technologies. Tuesday, Analog Devices, Dell, and CrowdStrike. All right, that's the weekly update. Feel smarter? I know I do. Let's bob our heads up and down. Yes, yes. All righty, let's get to the market recap. Dow hits record as Trump's pick for Treasury stokes optimism. All right, the Dow surged to a record high Monday, buoyed by President-elect Donald Trump's nomination of prominent investor Scott Bessent as Treasury Secretary, signaling stability and market-friendly policies. Yeah, we'll see. Bessent, a seasoned investor, has advocated for tax reforms and deregulation while opposing harsh trade tariffs. His nomination alleviated concerns about aggressive trade policies under Trump, reducing the risk of a trade war. Following the announcement, the dollar retreated and U.S. Treasury yields fell, providing further relief to Wall Street. No one asked me. I'd love to be the Treasury Secretary. I do it for free. I mean, maybe just cover my costs flying back and forth to Washington, but I do most of my work from here in my home office. Maybe some armed security out front, that'd be nice. But other than that, I don't need security. I got my own pistols, so I can defend myself. All right, let's jump back in. Trump also announced key cabinet picks, including Pete Hegseth as Defense Secretary, Howard Lutnick as Commerce Secretary, and Mike Waltz as National Security Advisor. Broader market sentiment improved on reports that Israel was nearing a ceasefire with Hezbollah, potentially de-escalating tensions in the Middle East. Yeah, those Zionists should really be nicer to their neighbors. They'd have less fights. Attention now shifts to the October PCE price index, the Federal Reserve's preferred inflation gauge, expected to show a 2.3% annual increase. With inflation data due before the Fed's December meeting, the PCE report will be critical in shaping expectations about potential rate cuts, especially as the Fed adopts a cautious stance amid persistent inflation. Corporate highlights. Retailers took center stage ahead of the holiday shopping season. Bath & Body Works soared 17% after raising its full-year guidance on strong Q3 results. Macy's slid 2% following a delay in its Q3 report due to accounting issues and disappointing preliminary sales. In tech, Intel gained 1% as reports suggested it was close to securing an $8 billion grant under the CHIPS and Science Act. Great, more free money from the government. Meanwhile, speculation that Lattice Semiconductor may bid for Intel's Altera unit added intrigue, potentially complicating Intel's plans to sell a minority stake. So the takeaway, optimism around key appointments, easing geopolitical tensions, and strong corporate updates drove markets higher with inflation data and Fed action set to dominate the week ahead. I know, Jake, it's pretty boring stuff. All right, let's get to our last article of the day, the Monday Morning Outlook from First Trust, Mr. Brian Westbury. This week's article is titled Budget Rules Shenanigans. Let's see, whoops, what's going on there? All righty. The 2017 Tax Cuts and Jobs Act, commonly known as the Trump tax cuts, is set to expire at the end of 2025 unless Congress acts to extend it. This expiration includes tax reductions for income, estates, and qualified small businesses, presenting significant legislative challenges ahead. Under Senate rules, maintaining the current tax rates requires 60 votes unless offsets like spending cuts or tax hikes are introduced to pay off the continuation. Without bipartisan agreement, extensions risk being temporary, much like the original Tax Cuts and Jobs Act. These rules create a bias against tax cuts, requiring strict scoring by the Joint Committee on Taxation and the Congressional Budget Office, which often exaggerates revenue losses due to static assumptions that ignore behavioral changes. Critics of the Tax Cuts and Jobs Act argue it would significantly reduce tax revenues, but reality proved otherwise. The CBO projected revenues to drop 17% of GDP between 2021 and 2024, yet they averaged 17.7%, above the long-term average of 17.3%. Government forecasts overlooked the economic growth spurred by lower taxes, revealing the flawed nature of static scoring. And if I could stop here, the government receives plenty of money. It's, whether or not it's your local county, your city, your state, and certainly the federal government, they have plenty of money to work with. They just choose not to allocate or cut spending or fire anyone. Once you get a job at the government, you're pretty much there unless you kill someone on campus or on site. So otherwise, you're there forever. And which is very disappointing as a taxpayer because I'd like to round them all up and throw them into wood chipper's feet first. Anyways, all right. So it's not a matter of government spending, it's not a matter of them not having enough money, which they always panic over. Oh my God, we can't reduce taxes because we wouldn't have enough money. Yeah, could you just print it anyways? All right, jumping back in. The real fiscal challenge lies in spending, not revenue. just like I said. In 2018, the CBO forecasted public debt would reach 22.9 trillion by 2024, but actually the debt ballooned to 28.3 trillion due to unchecked spending. Tax hikes face fewer hurdles than tax cuts under current rules. Revenue increases are assessed statically without accounting for potential economic drag, allowing them to be permanent changes. Conversely, tax cuts require periodic renewal and higher vote thresholds, putting tax reduction efforts at a legislative disadvantage. Extending the Tax Cuts and Jobs Act will require creative solutions or bipartisan cooperation. Whatever. Dynamic scoring could better reflect tax policy outcomes, but without it, the debate over spending versus revenue will continue to dominate fiscal policy. I mean, what I personally would do, I would just blow up the republic, walk away from the debt, and say, hey, all you countries that bought all of our debt, you're out of luck. I mean, first you have to convert the people's money to like something like gold or Bitcoin or silver or something else, but it could be done. But anyways, all right. Well, that's everything that I had to cover for today. So if anyone needs anything from me and wants to get their financial crap together, go to DSAFinancialGroup.com. That's where all your financial planning needs can be addressed. So give me a buzz. I'd be happy to help you get back on track. All right. Well, like I said, that's everything that I had to cover for today. And just a few days this week. I don't know if I'll be doing anything on Friday, but we got tomorrow and Wednesday, and then we got Turkey Day on Thursday, and Friday's kind of I might do just a weekly or wrap up the week video. But anyways, it's going to be kind of a slow week. So if anybody needs anything, give me a buzz. I'd be happy to help. Otherwise, have a great night, and I'll talk to you next time. Adios.